And welcome back, everyone. Thank you for joining us in today's video. This video is going to be all about if you have a conventional loan right now, you're a homeowner, what does it look like to refinance your loan? And also we're talking about if you have other debt as well, how do you kind of figure out whether or not it's a good time to do a loan refinance and get rid of those high credit card balances, for example. So I'm joined by Jim Black again.
Welcome. Good to see you, Jason. Thanks for having me on your show again. Appreciate it.
Absolutely. We've been making several videos about refinances, talking about FHA, VA loans, and today's video is all about conventional loans. So I'll let you kind of take it away and we'll kind of provide some insights regarding what it's look like to refinance a conventional loan.
Sure, absolutely. So first things first, looks like rates are going to be trajectory to go lower, which is nice for everyone who has debt. The lower the cost of debt, the more people can borrow, the better it is for the consumer. Whenever you look to do anything regarding financing, you need to look at the holistic view of your entire debt profile. It's not a smart decision if you're only looking at one portion of that, because in these times when you do a big financial transaction, we want to evaluate all of the money you have outstanding, all of the cost of interest, your overall cash flow payments, and the blended interest rate you're paying for that debt. So what I always like to start with is a blended rate example. So we hear this every day right now. Jason, I don't want to touch my first mortgage because it's at such a low rate. I just don't want to touch it. It's at 2.99%. Here's an example of a first loan and other debt. We'll call that other debt either a second loan or student loan debt or credit card debt or whatever you might call it. In this example, we have a total outstanding balance of $750,000 of debt. $550,000 is fixed at 2.99. The other debt is on a variable loan at 9.99%. That shows you that the effective blended rate on the entire debt is actually 4.9%. Everyone gets fixated on that 2.99 number, but their debt's almost double what they expect, what they realize in terms of the overall interest expense. So first and foremost, we evaluate the blended rate on doing anything. Once we have this figure of 4.859 on $750,000 of debt, we then want to look at the apple-to-apple comparison of refinancing. So we want to check to see if it makes sense to get a rate that's lower overall on our blended rate of 4.859%. To do that, we need to understand if there are costs involved or if there are no costs involved. So our second part of this equation is to understand the break-even analysis. And again, I want to show before we do that how severe these numbers can change depending on your loan balance. So let's say I had a $250,000 first loan and $200,000 of a second loan. My effective rate really is 6.105. It's not 2.99. So we really want to think about that mindset you need to think about of the overall average of your debt. So to determine if we can get a better rate than 6.105, we need to see the cost versus the savings. Cost versus savings can be determined in two formats. One is the interest difference in expense or the overall cash flow payment difference in expense. And I'd like to share my next screen that shows the break even in months determined by an approach, just looking at a way that you would simply look at refinancing. So today, if you were to look at your break even on this example here, we have total costs of $10,000 to save $1,000 a month. That break even is just purely $10,000 divided by $1,000 equals 10 months to break even. So if you have a plan to stay in your property longer than 11 months, it would make sense to refinance. In that exact same scenario, if it took us only $100 in savings for $10,000 in costs, that break even is way, way higher. It's close to 9 years for that same cost versus savings. So that might not be the approach you want to do if you're looking to refinance.
I was going to say so what would be your recommendation if someone's looking to do this break-even analysis, which is pretty simple, just looking at your payment today and what would be your future payment? What would you recommend for, if someone has long-term time horizons? It makes sense if someone's looking to sell like in a year, like why would they refinance? But someone who's looking to live in their property for the long term, what's your opinion regarding what kind of, or when they should have a break even after paying for a refi?
Yeah, the way I look at it is less than about 18 to 24 months would be the time horizon, because while we think we're going to stay in our house for 30 years and have a 30-year mortgage payment forever, the likelihood of that is not as high as we think it is.
Yeah.
Life happens, right? We've talked about this several times. You have kids, you get divorced, you get moved for a job, you lose a job, there's a death in the family. All those things could happen. So while we want to plan that long run mindset, we want to also think that that break even should be less than about 2 years. And then again, it's just one less thing to worry about. I have a really interesting study that I did back in grad school. I got my master's in business, and one of my people in my cohort, he was a financial analyst, and he was on these crazy adjustable rate mortgages, always looking at the leveraging things correctly. And his name is Laurent. He's from Canada. And I said, Laurent, how much is the difference in savings from just getting a regular 30-year fixed loan to doing all this complicated interest-only 3-1 ARMs and refinancing? Oh, Jim, it's about $200 a month in savings. I said, okay, fair enough. I said, how many hours a month do you analyze this and study this?
That's funny.
And he's like, oh, I've never thought about it that way. I'm like, more than 20? He's like, yeah, more than 20. So I'm like, you could have, that's making less than working in a minimum wage job at McDonald's. Like, why worry about it? Why is that so much stress you should have? So sometimes you can get so in the weeds on this stuff that just take the idea that you're making a good long-term decision. You're never going to time it to the exact bottom. It's merely almost impossible. And just make sure that it's one less thing to worry about in life, right? You and I do this for a living. We worry about this a lot. We study this every day nonstop. But if you have kids and job and other things going on, just make a good decision and know, wow, I'm going to save XYZ dollar amounts a month. I can put that towards college saving plan or my own retirement or allowance to go out to dinner with my wife or kids, whatever it might be. Just have that mindset. If you get too specific on this thing, you can go crazy. So again, I could have gotten a lower rate on my loan, probably, but I'm happy. Because looking back in hindsight, I've saved money, I'm doing well, and my payments are good. So that's all I'm going to worry about.
Yeah, makes sense. I mean, if you're saving money, then then take the peace of mind that you can save that and put it elsewhere. Talking about opportunity costs, and so we made videos about doing a VA refinance, FHA, which is definitely like a streamlined process for government-backed loans. What is the process of going through underwriting, the process of doing a refi for a conventional loan? How's it?
Yeah, great question. So it's a little different. That loan you mentioned earlier, VA and FHA, are under the Ginnie Mae umbrella where they have more flexibility because they're self-insured. Under conventional loans, the same process is done to collect documentation to make sure that everything's okay. What we're doing to help simplify that process for the rest of 2024, today's early August, is cover the appraisal cost if there is one involved. We don't believe in charging excess fees or duplicate fees. So what we're trying to do is simplify the process for our consumers and not have them pay extra money if we can avoid it. So our goal, and whenever we look at that, is to make sure we collect all the documentation, we're efficient, we have a team around us, and we have like 4,000 options to choose from. So we're always going to present 3 options to our consumer and our client, let them know it's about their goals, not the bank's, and let them choose and be part of that empowerment. When we do that, people feel more comfortable and confident that they're making a great decision. So the next time they can have these tools again to look at and use in other aspects of life. I had one example where I helped a guy that was a post office worker that I saw every day in my office, helped him refinance, educated him. He went and bought 3 other homes with that same process.
Wow.
Comes in one day about 2 years later, his name was Bup. And I said, hey, Bup, what's up? He's like, Jim, I have 2 documents I want you to see. Okay. He goes, I want you to help me with my kids and deciding what college he goes to. It was such an honor that I had been there, part of the journey to educate him on financial awareness and soundness. Again, it's just saving money, but it was nice that I was appreciated to be there as one of his trusted advisors. So we take that approach with everyone we help. We want to be there for the life journey ahead, for the kids, for the grandkids, for parents, whoever it might be. And we're creating a custom solution that's different for every single person.
Yeah, it's so cool. I mean, especially being you're a mortgage broker, rather than only having like one loan we can offer to our clients, there can be a wide range of products that works for many people. So it's great to offer many options for people who are looking to do a refinance versus like it just kind of pushing just one product that may not fit their needs, basically.
Yeah, and if people even want to do like a aisle check on aisle 9, whatever price thing, we're happy to look at that too to make sure we put someone in the right situation, or if they already have a great situation, to stay in that. Jason and I had a YouTube subscriber reach out to us on Monday, I think it was, and we talked about it wasn't the right time to do something.
Yeah.
So the empowerment of saying no, or that it's not the right time, or here there's a better solution out there, that's what it's all about, is making a difference and being authentic and having a passion for this industry, right? I think it's really clear. Well, all you've done on your show and channel is shared passion, information, awareness, and then let people make good decisions on their own, which is awesome. So
yeah, definitely taking a data-driven approach rather than saying, yeah, here's what I feel is happening. Yeah, and that person who reached out, we told them, hey, it's not in your benefit to do a refinance. Check back later when rates decrease further. So he really appreciated that, rather than looking after your own pocketbook and saying, yeah, you should definitely refinance right now. You're going to save some money, which wouldn't be the good advice for that person. So thank you, Jim. So I guess real quickly, if someone's looking to do a refinance, if they have a conventional, VA, whatever, what is let's just talk about conventional. For the application process, what documents do you need?
I get what's called the 4.2s. So if someone's a salaried borrower, for example, we get 2 years tax returns, 2 last pay stubs, your last 2 W-2s, and then the last 2 asset statements. I like to get it more than less, because I want to be an advisor and help fill any voids that we see in that due diligence process. So for example, maybe someone had kids last year and they don't have a trust set up yet. Things like that. We want to help them make sure they understand there may be other tools that we can help suggest or get them to the right resources for. We don't get paid. We don't get compensated to do any of that stuff, but we just want to make sure our clients get the best level of service. And that's what I like to do, right? If we can help someone make better decisions in life, that's way more important than saving $12 on a mortgage payment.
Well, thank you, Jim. And thank you, everyone, for watching today's video. We'll provide links in the video description below. If you guys are not ready to submit an application, but just want to talk to us about your scenario, look at what it looks like to do a refinance, happy to have those conversations. So yeah, everyone watching today's video, we appreciate you so much. Have an amazing day, and we'll see you in the next video. Thank you.
Take care, everybody.